In today's video, I'll be going through a full strategy and trading plan breakdown on the best new supply and demand scalping strategy that implements liquidity concepts that will boost your win rate like crazy and also give you some insane risk to rewards. So by the end of this video, you'll have a full plan on how to trade the strategy on the 5 minute, as well as a full understanding of everything I'm thinking about before entering my trades. So as I'm sure a lot of you know, this was a heavily requested video after my last upload, which was a full strategy breakdown on how to trade what we call liquidity supply and demand, which by the way, I'd recommend you watch that if you haven't, because it goes into a lot more detail than what I will with this video in terms of the universal rules, etc. However, this is the 5 minute time frame variation of the strategy, as even though setups may look the same, general rules such as entries will differ quite a lot on the 5 minute if you're looking for the best, most consistent results. So even though I've only been trading the 30 minute recently, this is the full breakdown for those scalpers out there who are looking for some insane risk to rewards and just to generally boost their supply and demand strategy like crazy. But yeah, before I get into the rules, I'm going to give another quick breakdown. Once again, I won't go quite as in depth as the last video. However, if anyone's new here just looking to scalp, I'll give a quick breakdown. So if you're new to the strategy, then this diagram should help a lot. Basically, all that liquidity supply and demand is using normal supply and demand traders as liquidity to help our zones go crazy. So as we can see here, we have a demand zone at the bottom here, which is created by this big push. Then we came down without tapping the zone, broke the high that made the liquidity, which is here. And then as we came down, we faked out normal supply and demand traders that would be getting in at this zone, use them as liquidity. And on top of that, we get a larger retracement, which investors will like because they'll get a better price, they'll get more of a move. And these are the real areas where investors are trying to get in at, and that's why these zones go so crazy when they tap. Now for this, you may want to go to my last video because I went more in depth with it and this can be quite confusing. However, accuracy zones are very important. I'll let you pause the video, read this, and all you really need to understand is on an example like this, where we have a supply, if a green candle that we mark as the supply zone goes below the next red candle, then we'll only mark it by the body at the top wick, and vice versa for demands. But that's all I'm going to say for this. You can read the rest. You can go to my last video because that's where I went more in depth on everything. And then we also have the universal rules. These are quite simple. So first of all, the zone that we enter must be untapped. So as you can see here, this liquidity never came into the zone. Secondly, we must never close inside the zone. If we close inside the zone, it is an invalid trade. We will not take it. And thirdly, liquidity must take out its own high or low. For example here, this is the liquidity that got created, and here was the low that created the liquidity, and we broke it and went up to the zone. So yeah, that's a very basic explanation of how the strategy works, but I'm just trying to get into the 5 minute specific rules for you scalpers out there. So yeah, I'll get into that now. So firstly, we'll start with trend. This is a big thing that a lot of people get confused on when trading. So what are you looking for when it comes to market structure? What specifics are you trying to see before buying, selling, or just not taking a trade at all? So first of all, I'll just say when you're on the 5 minute scalping, overall trend does not matter as much. That might sound dumb at first, but I will explain. In my opinion, I don't think anybody should be getting caught up on the 4 hour or the daily chart. Even the 1 hour is a bit too far. This is just because it is simply not as important on the lower time frames. I'm sure many of you have been taught supply and demand by a select few people, and I'm sure these people are constantly checking the higher time frames in order to make it seem like they know what they're doing, even though they're on the 5 minute and they end up aiming for like a 1-to-1. I've been through it, trust me. That's what I used to be doing. But even in our case, usually the minimum risk to reward will be 1-to-3. On the 5 minutes, a little bit different, but we'll get into that. But let's say 1-to-3, that's what, maybe 15 pips? Of course, this depends on which pair you're trading, but the point is, it really doesn't matter to the higher time frames. So if I actually go onto the charts here, let's go onto the 4 hour. So for example, we can look at trend here. We can easily say we're bullish. There's not really much argument about it. We are bullish. So what most people would do is they'd say we're only taking demand setups here. However, as we know, and I'll talk about this a lot more later, almost all candles have both a top and a bottom wick. Okay, don't worry, I'm going somewhere with this. So if you look at almost all these candles, every one has a top and a bottom wick, except maybe the occasional one that doesn't. But 95% of the time, every candle has a top and a bottom wick. So like I said, right here, you'll be looking for buys. You got this massive bullish movement here. You could easily say, all right, I'm only taking demand setups. However, just this bottom wick alone right here is 30 pips. You can easily catch a 1-to-3, even a 1-to-5, maybe even higher within 28 pips. That entire movement that you've just caught could just be the higher time frames trying to make a lower wick, because that's what the markets do. They literally just try and make upper and lower wicks before moving in one direction. And basically every candle has these wicks that give you space to do so. Even if we go to a smaller one up here, this is 12 pips, you can easily catch a 1-to-3 in that. So basically, all you're doing by checking the higher time frames is overcomplicating your trading. Basically giving yourself a reason not to take a trade, even if it ends up winning. Basically giving yourself a reason not to take a trade, even though it will likely end up winning. And generally just missing out on a lot of the best opportunities in the market. But once again, say right here, you're looking for buys. We can see this big bullish momentum upwards. So I can show this better off in replay mode. But say you think we're bullish right here, because obviously we're getting this big bullish momentum, 300 pips just straight upwards. If you're on the 4 hour, then yes, that would make sense. But when you're on the 5 minute, I just want to show you how it really doesn't matter. So say you're just around this area, you see the most beautiful 5 minute supply setup, and you decide not to take it because we're bullish on the 4 hour, you would have missed this. And look how much room it gave you. This is literally 42 pips. You could catch a 1 to 10 in that, bro. Like, you do not have to be concerned about these high time frames. Trust me, you can chill on it. It will just add stress to your trading. You miss opportunities that are really just as quality as the other ones you're taking. And like I said, a lot of the time, these setups will just give the market a good excuse to make an upper or lower wick. So don't stress about it. Trust me, don't overcomplicate trading. You're just gonna ruin it more for yourself. But next, I need to talk about entries. And they actually differ quite a lot from the ones on the 30 minute that I talked about in my last video. However, if anything, entries are much more important to master on the 5 minute, as stop losses will be very tight, you have less time to react, etc. So make sure you listen to everything if you actually plan to trade the 5 minute. So yeah, let's just get into it. So there are a few ways that you can enter on the 5 minute, and it depends on the situation of the setup. But first of all, I'll go through a standard entry that you'll most likely be taking 90% of the time on your 5 minute setups. And to put it simply, you're just going to be waiting for the close of the candle. Now this is very important, except for a very few specific times, which I'll obviously go through in a second. But as I've heard RD say, which I thought was an amazing point that I really don't hear enough, but the reason that we're waiting for the candle close is because during backtesting, you will always take the close of the candle as your entry. And this is because you can't take it as it's rejecting, because you can't see candles forming or rejecting in real time. And this is actually a big reason why a lot of people will just smash backtesting, get insane results, and then as soon as they go into the live markets, they just cannot convert those skills whatsoever. So if you just trade exactly how you do in backtesting, then you will succeed more. But as you can see here, we literally just waited for the candle to come inside the zone and then close, and that was our entry. Another reason you don't really want to take it whilst it's rejecting is because the candle could end up just closing inside the zone, which would make it invalid. But as long as the candle closes outside the zone, rejects nicely, then it is valid to take. And it also allows for some insane risk to rewards because these entries are pretty good, which is crazy because the win rate is also pretty good, especially when you're hitting these risk to rewards quite a bit. 1 to 5s are very common with the strategy. But yeah, anyway, let me get on to the next entry method because this one's a little bit more confusing. So this entry method will likely take a lot of live market experience for you to fully master it. However, when you have the knowledge and experience with it, this could be extremely beneficial and powerful to take a 1 to 2 setup into maybe a 1 to 6, 1 to 7, or even further. So make sure you're listening. Now you will have to be very quick and not really hesitate if you want to take these, and you will have to get some experience with some fairly higher level concepts. So this is about higher time frame flip entries. Now once again, this is another concept I learned from RD, and you can learn it in the Discord if you'd like. It's in the first link in the description. The value provided in there is genuinely insane. There's webinars, daily forecasts, and genuinely it's just the best thing I've been a part of. I learned so much in there. A bunch of people have told me they've learned a lot from it, and even though I know the information now, I still be chilling in there. So if you want to ask me or RD any questions, that's probably the best place to do it because we're just consistently in there answering anything, just trying to provide as much value as possible. But continuing, basically what we're looking for in order to take a higher time frame flip entry is something like this, where basically we have a higher time frame candle that opens. For example, this is a new 15 minute, and on a demand example right here, basically we're just looking for it to create a lower wick and then flip in our direction. And this is one of the few times I won't take an entry on the candle close. I will instead take it on the flip. This is because on new high time frame candle opens, it often brings a lot of momentum in whatever direction, and when it's mixed alongside with our 5 minute zones, it will very likely bring a lot of momentum in our direction, and we don't want it to leave without us. And it is very important that you wait for this high time frame candle to make a bottom wick first. And this relates back to where I said every high time frame candle, or just every candle in general pretty much, has an upper and lower wick, or it's very rare for it to not. So by creating this lower wick before going up, that has then filled the last requirement that we need for price to really want to go in our direction. And if we were to just go up without creating a lower wick, we would likely come back down, make that lower wick, and it would likely ruin your trade. And that is a very avoidable loss if you had just waited for the wick to be created. And in these situations, you will have your stop loss right underneath the candle. I'll talk about stop loss placement more in a little bit, but a lot of the time you'll have maybe 1 pip gap. However, with this entry, you'll just put it right below the candle because the momentum that we come with, we can expect it to just explode straight up. But on a setup like this doesn't really look like a major difference because we're either entering here or here. But when you look to the risk to reward, with the correct entry, we're getting a 1 to 6.8. With the candle close entry, we're getting a 1 to 4.3. So that's quite a big difference. But a lot of the time, this could literally change your setup from a 1 to 2 into like a 1 to 8. So yeah, that's something pretty important that can really upgrade your trading. So anyway, I'll get into my next point now. So once again, massive shout out to RD. I've absolutely yoinked this from him. This is in the Discord. Basically everything I've shown here is in the Discord, but there's just so much more in there as well. So I'm just giving a lot of the free source. But these are basically stop loss based rules, as well as where you'll want to place your TP based on those stop loss. So as a general rule, for the standard entry, you'll basically want to have your stop loss 1 pip below the candle that entered the zone, assuming it didn't close inside, of course. So we can measure that out. So 1 pip would be basically at the bottom of the zone. This is very weird because that looks like a large pip. Am I tripping? But anyway, that's not the point. And then we can see we have a 3.8 pip stop loss. So if we look on the right here, we can see for a 2.6 to 5 pip stop loss, have a minimum RR of 1 to 3. So 1 to 3 would be right here. Once again, this is just minimum, so you can target higher. Like right here, you'd probably just target the high because that just makes a lot of sense. And if you'd like, you can move stop loss to break even when 1 to 2 is hit. So once you get to here, move stop loss to break even. It's a risk-free trade. As you can see, it wouldn't have hit break even anyway, and we would have basically cruised straight to TP. But these rules basically give a good balance between good risk rewards and good win rate, which is why they're quite specific, because it's kind of based on what has worked, based on years and years of data. What is just the most consistent way to balance everything perfectly. Now, one rule that I never actually used when I was trading the 5 minute, because I wasn't even trading it for that long, to be honest. However, I've seen the results for it. Once again, I don't mean to like promote it like crazy, but there's like monthly results in the Discord from when the 5 minute used to be traded, and you can go for double TPs, which is basically just, for example here, if you're going for a minimum 1 to 3, you go for a 1 to 6. If you're going for a 1 to 2, you go for a 1 to 4. And they hit a lot. Like they get hit quite a lot of the time. There's even data on like specific pairs, and one of them, I remember GJ, hits the most double TPs. So that's something you might want to consider as well. Even if you don't have the balls to do it quite yet, just always look to see whether trades would have hit a double TP, because more often than not, it would do that, but it's mainly just whether you have the psychology to handle potentially losing because you're going for double the risk reward. But yeah, that's just something I thought I should mention because you can get some insane results from that. Now, another rule for the 5 minute charts is that you want 2 candles closing in the opposite direction of the zone to create valid liquidity. Now that sounds like absolute waffle, but basically what that means is when you're coming up, creating your demand zone, as so, and when you're coming down to create your level of liquidity, you can't just have 1 candle and then go back up. You basically need 2 candles. This is a bit of a weird example, but you need 2 candles in your direction before it then breaks as high. So right here, as you can see, actually this is a bit of a weird example because it's consolidation, but to be honest, that's something we like to see as well. But you can see we have 2 candles here that closed before we broke the high. Whereas if we came up like this and we counted only this as the liquidity, then this would not count if it came down like this, because it doesn't hit as much. Now, sometimes 1 candle liquidity will hit, like you won't be surprised if you just see it work, but it's just much less consistent results. So if you're trying to be safe with it, trying to have a better win rate, which why wouldn't you, then I would recommend just sticking to 2 candle plus liquidity. All right, before I get into the last few topics, I just want to say if you have any questions, you can leave them in the comments below. I'll answer any questions anybody has. Once again, test me, I answered all of them in the last video. But also, please consider subscribing and liking. I don't know what it does, but it makes me feel good about myself. So if you enjoyed or it helped, then yeah, please consider that. But yeah, the last things I have to talk about is when not to enter trades. Now, there's obvious ones with like news and whatever, but there's some more specific ones when it comes to the 5 minute. And this is once again related to high time frame candles. So times that you don't want to enter is 5 minutes before a new 30-minute candle open, or 10 minutes before a new 1 hour candle open. Now that sounds a bit confusing, but back to this example here. I know I've been acting as though this should have been a standard entry, but it shouldn't, because this is actually a new 1 hour candle. But basically, if we imagine that this candle before had tapped and this black candle was up here, even though we closed rejecting on this candle, we would not enter. And that's because it's within 5 minutes before a new 1 hour candle open. This is once again because new high time frame candle opens can basically just bring random volume in whichever direction. And as you can see here, this would have just stopped you out to create the bottom wick and then exploded upwards. So you do not want to be entering before these times. It is just an unnecessary risk. If you backtest this, then you'll notice it a lot. Basically just if a candle taps your zone 5 minutes before a new 30-minute or 1 hour candle open, the next candle would likely just stop you out and then go in your direction, or just completely invalidate the trade, because these high time frame candle opens just kind of do what they fancy a lot of the time. So once again, like I explained earlier, you'll just be waiting for the higher time frame candle to open, go into your zone, and then flip, and that's where you'd enter, rather than entering on here, because a lot of the time they will create these lower wicks and then go in your direction. And one more thing, since this is basically just a full trading plan breakdown, I would just recommend everybody to just do one trade per day until you're very experienced with the strategy. That is just the best way to go about it. This is mainly just because of psychology. You'll notice more times than not, if you take a loss on your first trade of the day, you will then always see another setup because you're basically just forcing something. Just stay disciplined to one trade per day until you're very experienced and you know you can stay disciplined, and then maybe take two. Just stick to it, backtest all of this. It may have been quite a lot to take in because it is quite a lot of specific rules. Once again, this is partially the reason that I switched to the 30-minute. It's much more relaxing, but I know a lot of people like the 5-minute and I respect it. I really like the 5-minute as well, but personally for me, the 30-minute worked better. But different stuff works better for other people. So I know a lot of people needed to see this. But yeah, that's the end of the video, man. I wish you an amazing day. Go put in the time and effort, and trust me, this will all work out. So yeah, I'll see you on my next video, man. Peace.